Hi, everybody. Scott with the Market Update Desk and Mortgage One. It's December 21st. We keep having good Christmas presents come out every day in the market. And I think we're even going to continue to get a much bigger present potentially tomorrow. So the market started today a little bit weaker because we did have a neutral to a little weaker than expected 20-year bond auction, which we did have that concern. The nice thing is we had Q3 GDP, the third and final revision come out this morning, showed that the US grew at a 4.9% annualized pace, which was revised lower from the 5.2%, which was the second revision. And it was lower than what the market was expecting. This has helped bounce the bond market back and is in the green, and that's fantastic. So, this lower than expected GDP is showing that the economy didn't grow as much as expected and will continue to weigh on how we move forward because the GDP looks like it's contracting, which will conversely help us in the mortgage rate world. Within that GDP report, there's a very interesting factor. It's actually a quarterly analysis of PCE, personal consumption expenditure, and it showed how much inflation rose from Q3 last year, 22, to Q3 of this year. And the figure was revised once again lower than expected from 2.3% to 2%. It's exactly what the Fed has been talking about, this 2% target. So we're very close to having a one handle on quarterly PCE. This was big news. This really helped the bond market pull back from the weaker than expected 20-year bond auction. Now, when we get PCE tomorrow, it's likely going to be less than what the market was expecting. We're expecting it to fall upwards of 0.2%. And that's going to potentially bring the headline PCE from 3% to 2.8%, and the core from 3.5 to 3.3. So we're going to be in the two handle for headline PCE. We're inching closer to what the Fed keeps talking about their goal is, which is fantastic. Now, the betting market is now all the way up to an 83% chance that the Fed starts to cut rates. That's the Fed funds rate in the March meeting. That will be huge news for the market. And you better believe we're going to have a lot of home buyers out once the market and news starts to talk about that. So the other item that came out today was the weekly jobless claims. Initial claims rose 2,000 to 205,000, kind of in line with what the street was expecting. Continuing claims were virtually unchanged at 1.865 million. Now, keep in mind, this is still one of the highest readings we've had since November of 21 for continuing jobless claims. That is definitely a concern within the market. The downward pressure on wage inflation is also benefiting mortgage-backed securities and the 10-year Treasury. Here's a real cool thing. Realtor confidence survey came out today from NAR. The Realtor confidence survey came out for November, showing that the confidence increased, and realtors expect more buyer traffic in the next coming months. Additionally, the average bid per home rose from 2.5 to 2.6. We've been talking about this. If you don't act now, be prepared for even more competition, more bids on homes you're looking at, and the opportunity to secure a offer gets more difficult and prices increase. So the market right now for technicals, mortgage-backed securities are down 5. 10-year Treasury is basically flat at 3.8695. Wow, just over a month ago we were talking about 5% on the 10-year Treasury. So give us a call. We're happy to help, go in depth on any other questions you may have. Look forward to helping you out, answering your questions, also helping buyers get pre-approved. Give us a call, 616-293-2189, and let's hold on to our hats for tomorrow. We could have some great news.